Hey, what's happening, guys? Dan Dario here with another Options and Play video update. So we're going to take a brief pause from all of the earnings videos, all the earnings talk we've had over the last couple weeks, and today we're going to uh, go over briefly just what is expected, what the setup is into tomorrow's FOMC rate decision, and what's expected by the options market. All right. So tomorrow night you have some big names reporting like Apple and Facebook. But until we get there, we're gonna have to really focus on the Fed because I mean, like this is going to be uh, arguably a bigger. I mean, it remains to be seen. I'll tell you why in a sec, but it remains to be seen whether it's going to be a big catalyst. It's certainly important. Options not necessarily pricing in a huge move, versus like Apple and Facebook. I mean, like those could move the market a little bit more dramatically than the Fed, just based off the options expectations. But we'll see. So first things first. I don't know if you guys are familiar with this. This is the Fed funds futures. This is where I go to check to see what expectations are. So great tool, hosted by the CME. It's free, worth checking out. So what you can see right now going into tomorrow's rate decision that there's basically a 97 and small percent, so 97.3% of traders expect that they're going to cut rates by 25 basis points tomorrow. Okay, so you can see current rate is 175 to 200, which is right here. So only 2.7% of people expect Fed to maintain their rates after tomorrow's meeting. So you can see that this is very extremely one-sided. Nearly everybody, so over 97% of traders are expecting a rate cut tomorrow. So I mean that kind of tells you right there that if we cut, then business as usual. If we don't cut, then we could see some volatility, right? Because everybody's leaning one way. Expectations are very one-sided, and we know what happens when people are surprised, right? Now, spiders, Qs, kind of similar coming into this week, and now they're kind of similar after the first couple days of this week. Both closed right underneath their 52-week resistance, so July, August, September resistance. Spiders busted through yesterday, closed at a new 52-week high, holding on to it today. Qs busted through that yesterday. Well, to a certain extent Friday, but I mean you can see today and Monday hanging above it very clearly, very substantially. And I mean both of those averages are leading us higher right now because the Dow still hasn't put in a new 52-week high, still lagging a bit. So what you're going to want to watch is if we do pull back. If we do pull back, we're really going to want to hold above the resistance because if we break back below, then that's going to be a failed breakout, and that either means chop, more consolidation, or even potentially a bigger pullback. Okay, so for the spiders, it's about 302.50 ish, and for the Qs, you can make the argument that fine down to 195. If it starts to get below 195, then it could be in trouble. So the Qs have some more room. Spiders a little bit tighter. All right. Now, what I was saying before about whether or not it's going to be a big move remains to be seen. It's because the spiders aren't really they aren't really that pricing in that big of a move into the Fed tomorrow. So these right now are the Wednesday expiration, so they expire at the close tomorrow. So this is the remainder of today, so about another hour of today's session, all of tomorrow, and the Fed meeting, and they're only pricing in about say about $1.60, so 1.6 points, so about 0.5%. Okay, so really not that big of a move, especially considering we moved more than that yesterday, right? So I mean, yesterday we were up 220. It was a Monday with not a whole lot of news, and going into the Fed meeting tomorrow, where the potential rate cut, they're only priced in about $1.60. All right, so that's what I was saying. Like expectations aren't that high for a volatile session, but again, they're also very one-sided in the sense that everybody's expecting a rate cut, or 97% of people are expecting a rate cut. So, the bigger potential move might be to the downside if people are surprised. Okay, just to give you a heads up, the Qs they don't have midweek expiration like the spiders do. So these are going to be these are going to be Friday expiration. Qs are pricing in about 275, but again, those aren't midweek; those are Friday, and that goes through Facebook's earnings and Apple's earnings after the close on Wednesday. So like those two are going to be big. I mean, Apple definitely more so than Facebook. It's going to be a really big report, and it's going to impact the Qs quite a bit. All right. Other things to keep an eye on: treasuries. Okay, bonds really starting to show some weakness. This is easily right in terms of momentum, easily the worst it's been since September, and arguably, I mean that September move was kind of like very quick versus this is a little bit more steady. So actually a little bit more bearish in the sense that I mean like this was like a fast reversal after a huge run, and over the last couple weeks it's been more measured, more steady, consistent lower highs, lower lows. It's breaking below the 100-week, which you can see here. And actually, if it takes out the September low, then it really doesn't have a whole lot until like the low 130s. So TLT might want to keep an eye on. I mean, definitely definitely gonna be something that people are gonna be focused on into tomorrow's meeting. Okay, and then gold and silver. So still looking for that to turn the corner. I mean, they're still building these higher bases, right? You can see gold holding above 140, 139. Hasn't been able to turn the corner. We have had some really sharp reactions on Fed meetings in the past. So back here in July, August, okay. And silver, basically the same thing. It looked like it was going to go, and then now it's pulling back a bit. So a little bit tougher reversal setup. But again, kind of like same like gold, forming a higher base, looking to turn the corner. To me, they both gold and silver both look like still holding like bullish pennant, bullish bases, and seem like the uptrend still intact. Slowed down a bit. That's why I'm saying turning the corner, because I feel like they still look pretty good overall from a longer perspective, and just kind of need to get like that momentum going again. So gold, silver, TLT, obviously spiders and Qs. Those are names you're going to want to watch. All right. So we'll see. We'll see what tomorrow has in store for us, because I mean we were at 52-week highs. The volume really has been pretty light on this move, and I'm just speculating, and I've read I've read some headlines just saying that maybe traders are kind of waiting for a little bit more clarity from the Fed before they really put money to work here. Because you can see that we took out the 52-week high on the spiders on about 50% of our average daily volume, which isn't a great sign for the breakout. And I'm hoping that maybe like the Fed rate decision tomorrow, the Fed meeting, maybe get that volume back, and maybe either we confirm the breakout or we set up the reversal. All right. So if you guys like these videos, definitely be sure to follow up for more information on the link in the description of the video. All right. If you have any questions or comments about this video, about anything I talked about in this video, or even like any trades that are open, please don't hesitate to reach out. I'd love to hear from you guys. Have a wonderful night. Best of luck with the Fed day tomorrow, and I'll talk to you all tomorrow.